What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 24th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend a brief amount of time to help a lot of you out there who might just be getting started in researching and looking into digital assets or cryptocurrencies like Bitcoin, Ethereum, and Litecoin. And I want to go ahead and now explain a little bit about what they are and what they aren't, and along with that as well, talk about the investment thesis. And we're going to try to keep things relatively brief. The only thing I ask is that if you enjoyed the video, consider dropping a like and sharing it with a family member or friend. So that being said, let's go ahead and dive straight into it. So first off, what are cryptocurrencies? Cryptocurrencies, at the end of the day, are an alternative asset that kind of compare and have similarities, but also dichotomies and differences from some of the traditional assets that we know about. So the major thing that you obviously can pick up from probably the term cryptocurrency is that some people see cryptocurrencies as an alternative form of currency. There are many currencies in the world. There's US dollars, mostly used if you're in the United States. There's Canadian dollars, Australian dollars, the euro, the Japanese yen, the Chinese yuan, and dozens of other currencies out there that store value to some capacity and allow you to exchange it. Bitcoin, Ethereum, and Litecoin also allow you to do this. You can send money peer-to-peer, just like you can handing cash to someone, but in an electronic format. And along with it as well, a lot of people also build in the thesis that cryptocurrencies like Bitcoin are also very similar to gold in the sense that they have some kind of limiting capacity on their supply. But the greatest thing about Bitcoin, Litecoin, and Ethereum is that they have fixed monetary policies. And that's a very fancy term for basically determining how much supply is going to be issued over a given period of time. And Bitcoin actually has, alongside Litecoin, finite capped supplies. And Ethereum right now has a relatively limited supply in the sense of inflation or the issuance of new Ether being printed or created every year. Now, it's important to note the last key thing to really keep in mind without making things too complex is that no one really controls or owns these assets, whereas a traditional currency like the dollar is printed by a central bank or the Federal Reserve. In this case, Bitcoin, Ethereum, and Litecoin have no central issuer. It is basically a programmatic network that is determining, in this case, the new issuance of coins and agreeing upon the fixed rate at which they continue to issue new coins. So again, abstracting a lot of the complexities here, I recommend you guys go ahead and spend some time to do some research on it. But I want to go ahead and talk a little bit about the price and performance of these assets. So starting off here, obviously, with the granddaddy of cryptocurrency is the big one that you probably know about, and that is Bitcoin. Now, Bitcoin has had historically solid performance as an asset. No asset over the last decade has outperformed Bitcoin outside of other cryptocurrencies. That's an important thing to keep in mind. There are some maybe smaller or mid-sized cryptocurrencies such as Ethereum and Litecoin, which we'll talk about, that may have done something similar, if not greater, than Bitcoin. But stocks, properties, debt, any form of asset that you can think of, even gold and silver, have nowhere near performed what Bitcoin has done. And the reason why is because it's an emerging asset. This is also why you hear about extensive volatility. So let's go ahead here. I want to go ahead and talk a little bit about its historical performance here. What makes Bitcoin a great asset? Well, we're taking a look here all the way back since 2011, and the great thing about Bitcoin as an asset is it's not only a very parabolic asset. When it goes through massive bull runs, or basically upward markets where the price is increasing, we not only have these great significant run-ups where Bitcoin's price multiplies time and time again over and over, meaning that it can basically, rather than just having a few percentage points in gains where something may go up 10% in value, Bitcoin is moving up in value multiple valuations overfold in this case. So it might go from being $10 to $100 or $1,000. And again, this is because it's an emerging asset. But the other really valuable factor here is that Bitcoin continuously and historically sets in higher significant lows and higher significant highs. Right? We can see here that broadly speaking, though it has stark rallies and stark corrections, usually around 80%, in this case, it's always setting up new significant support levels or higher lows than it did before. And it continues to do this throughout history, which is really good because this gives us an opportunity to get an idea about not only how Bitcoin functions continuously due to its monetary policy or the issuance of new Bitcoin, but along with this, we can get an idea of when things are overextended and when things are oversold, or there could be buying opportunities. It's a relatively predictable asset if you actually take this long-term perspective that a lot of people don't take the time to do. And I want to make sure you guys start off on the right footing here. However, something that's really important to keep in mind and why I want to talk about crypto today is because if we take a look here at the short-term chart, Bitcoin has had a really interesting set of years here as it's gone through one of the most brutal bear markets that it's seen, as pretty much just like any other bear market, around an 80% plus correction in price from its all-time highs here back in 2017, where it peaked down in December. And after that, we went down here towards around $3,000 from a peak of 20K. And ever since then, it's been this kind of volatile swing where we've had overtly optimistic rallies. We've had pretty stark corrections. And what we've most importantly seen as of recent is a continued set of higher lows and higher highs in price, recovering from this V-shaped, this kind of decline here that we saw here in Bitcoin when it tried to retest back up towards the highs, but only got here towards around 13 to 14,000, declining all the way to 3,000. We've now recovered back up to this range here, and we have a real opportunity now to start to set in higher levels and test back towards that 20K level and continue the broader trend of the higher highs and higher lows. That's all you need to really think about here in regards to the asset. It's not what's happening on a daily time frame or a weekly time frame. It's so long as we're seeing, in this case, a broader continuation of the trend here for Bitcoin. Now, if we want to take a look at some historical performance here, some data in the sense of price, one thing that's really important to keep in mind with your expectations of Bitcoin, if you truly believe you're sold on Bitcoin, you think that it's going to go up over time, is to have proper expectations. One thing that I preach a lot that I think a lot of people in the space either disagree with or probably won't propagate as much as I would, and that is the fact that there is expanding cycles. A lot of people you'll probably hear will talk about a 4-year cycle for Bitcoin. And I personally disagree pretty extensively with this because the way that I analyze cycles is I look from the bottom, in this case of the bear market, or the beginning of kind of the next cycle where we set the lowest price and aim to go towards the highest price. And what we can see here is if we utilize that kind of measurement here, ignoring again the bear markets here and focusing on when we set the final bottom and when we set the final peak, which keeps things extremely simple, what we'll notice here is that over time, these charts expand. We can see that from the first cycle here, we went from bottom to top here, in this case for price roughly speaking, in 11 months, right? Along with this as well, we went here from the bottom here in November of 2011 towards the peak here in November of 2013, 2-year cycle. Again, 24 months here. The next cycle from bottom to top is 35 months. And if we were to basically analyze these past 3 cycles here and try to predict what might happen in the 4th cycle, in this case, we can see that each and every time we're adding around 11 to 13 months to the cycle. Again, we had 11 months here, we added 13 months from the previous length, and in this case, we added another 11 months. So if we were to go off an estimate here, if we were to go off a median estimate, we can assume that adding another additional, in this case, we actually want to extend this a little bit more here to 47. There we go. Just wanted to adjust my chart here a bit. In this case, if we add an additional 12 months, which is in between this 11 to 13 months, we can get an estimate for where we're going to peak out in this cycle. And that's around November of 2022. Again, a lot of people will propagate the idea that it could happen in 2021, or that it could happen even earlier that, or possibly way later. This is not only what I believe to be a relatively conservative estimate, but also points us, if we take a look historically at the performance of Bitcoin, towards a price around $100,000. So I think this is a very, actually relatively conservative level because Bitcoin in the past, from bottom to top, has had much more significant percentage returns or multiples on its price, even against its previous all-time highs. Bitcoin originally topped out around $1,100, if you want to rough it off around $1,000 back here in December of 2013, and pulled a 20x from its previous highs, going all the way near 20K. So in this case, all we're calling for from the previous highs here around 20,000 back in December of 2017 is a rally up towards 100,000. Not a bad return, but at the same time, something that we've seen Bitcoin easily do, if not greater in the past. So again, this is our thesis here. Longer cycles and lower general returns than what we've seen before. But I can tell you all, there's not going to be any asset out there in the market, if you're talking about gold or silver, if you're talking about stocks, if you're talking about the broader financial market out there, that is going to probably pull on average a 5x. There might be individual stocks, or maybe you'll have one specific commodity that is the rare case there, but there are not many assets that have the kind of room to grow like this. And the point that I always bring up is it's a term called markets of scale. And that's basically considering the valuation of Bitcoin as an asset class. Not so much the price, but the valuation of the asset class, which is taking the overall existing supply and multiplying it by the market price. That's what you determine as market cap or market capitalization. So if we take gold, for example, gold is well over $13 to $14 trillion market. Traditional U.S. equities are an over $50 trillion market. Global equities make up well over $100 trillion. And if you're talking about property markets and a variety of other markets, we can start to see how Bitcoin scales out differently. So just to kind of compare this here, right, this chart here measures a block here, just to compare different markets, as $180 billion in valuation. So Bitcoin at the time was worth $180 billion when they made this chart back in 2019. Right now, it's around $220 billion at the moment. So in this case, roughly speaking, still about the same measurement here, we can see a lot of these major tech companies far beyond what Bitcoin's valuation is. We can say the total assets of the Federal Reserve into the trillions of dollars. Gold in this case, making up a massive amount of valuation across the global economy. And again, just comparing gold to Bitcoin here, if we were to take 10% of gold's market cap here, we've got a major selling point here for Bitcoin to do that 5x from its previous highs, and much more returns than that, as we're not even at the previous all-time highs yet. But again, just comparing Bitcoin to gold here, you can already start to see the value proposition. But again, if you consider derivatives markets, if you consider global real estate, capturing even just a fraction of these markets is where Bitcoin has a real serious opportunity to become an emerging asset. Now, we've talked about the expanding cycles, some important things you guys should keep in mind. Setting your expectations to be longer term than most people will probably sell it to you as. They'll probably say it's going to happen overnight. Bitcoin's going to hit all new highs. It's going to continue soaring higher. It takes time for these things to happen. So one thing that, again, I want to instill here that I think is always very important to focus on is as we take in those bottoms to tops here, you can draw these lines here, generally speaking, with your target range here. And I think for this cycle, most people will generally project that it's going to be around 100K to 200K for price. And bear in mind that price rarely stays above that bottom to top line. It's going to take a while to get to those those new all-time highs. And along with that, you can use these lines, as we've seen throughout history, to showcase that price is probably going to ride along the line here, if not below it in this case. So this helps us keep our expectations for where price is going to go over the long term. Again, just bearing in mind that it takes time for these cycles to go through. Now, I've talked a lot about Bitcoin here as an asset and some ways where you can build conservative estimates as to how it can perform as an asset. But outside of this as well, I want to talk about Ethereum. So for those who may not know what Ethereum is, whereas Bitcoin would be almost seen as a digital gold due to its fixed monetary policy and limited supply, not only limited, but finite supply of 21 million coins, Ethereum is more known as a functionable blockchain or programmable blockchain that allows you to do different types of financial transactions, have different types of assets on top of it through the form of tokenization, and do all types of different things predominantly through a new phenomena that's really been shaped over the last few years, which is known as DeFi or decentralized finance. Now, I'm very big on DeFi personally. I've created not only an Ethereum wallet in the cryptocurrency space, which I'll talk a little bit about later, that can help you get involved in cryptocurrencies. But the major thing here is that Ether is the native currency of the Ethereum network, like how Bitcoin or BTC is the native currency of the Bitcoin network. All in all, though, Ethereum was one of the most parabolic assets back in 2017. It emerged as really the second leader in the cryptocurrency space for the fact that it allows you to do so much on it. You can build basically replacements for traditional banks on the Ethereum network where you can earn interest and you can borrow capital. You're able to, in this case, make swaps or trade assets in a decentralized format, peer-to-peer in this case, through smart contracts where you don't have to trust an exchange or bank or brokerage to own your capital or your assets. And what's really great here is that, again, putting all of those fundamentals aside here, if I'm just doing the analysis that I've done over the last 8 years in traditional finance, really actually over the last 9 years, it's crazy, I've been in finance since 2011. The crazy thing here to take into mind is that we can see here through just simple support and resistance analysis, not looking at a crazy amount of indicators, not overcomplicating things, just looking at the long-term weekly chart here for Ethereum, we can see here that the price has had a very solid recovery. We set a double bottom here on price, and I'll go ahead and just turn off my drawings here so you can see this very clearly. We can see that we've set a double bottom in price here around a very significant range here, around $80 to $100, and we've now made if we put our drawings back on here, we've seen here that price has been able to find support on previous resistance and also at a very contested range here before we kicked off the next cycle and really saw the major gains here for Ethereum going all the way from around $350 here towards around $1,400. So again, this is a very critical moment here. If you're watching this right now, whether you're watching it now at the moment when I've uploaded it or, a couple weeks out, you're in at the right time in cryptocurrencies to be looking for that next cycle to shape up. We're seeing the higher significant lows and the higher significant highs. That's what we want to see in markets. It's the same principle as I would apply for equities, for gold and silver. So again, very, very important. And another coin that a lot of people focus on is Litecoin. I always like to think of Litecoin as the silver basically as silver is to gold, as Litecoin is to Bitcoin. It is a secondary kind of store of value cryptocurrency that's a little bit more speculative in the sense of price. It has more volatile moves when it gets moving. And in this case, we can see, just taking a look at the long-term chart here, and we're taking a look at the logarithmic chart. It's important, and as you go through maybe your journey into investing and charting, you might maybe start to test around with logarithmic charts and again, start to learn a little bit more about technical analysis. But all in all, again, I'm not overcomplicating things. I'm just focusing here on the broader trend here where we had a general important range here of 20 to 40 bucks for Litecoin. We had a double bottom here in price. We've started to set higher significant lows, and now we're testing towards setting in our first higher significant high from what we set back here in August. And if we look at the logarithmic chart from the logarithmic line of support, logarithmic line of resistance, we're coiling in a wedge here, which is going to probably lead towards a breakout moment sometime here going into the close of 2020 for Litecoin. And this to me looks fantastic. Again, abstracting what asset it is, I look at the chart here and I try to figure out what looks good to me. If it looks good, if it looks bad. And in this case, putting aside that they're digital currencies or cryptocurrencies and all the fundamentals we talked about, this is really exciting price action here. Again, signaling that it's probably setting up for the next cycle. Now, one thing that I think is really important to focus on here is thinking a little bit about the overall asset class here. So cryptocurrencies as an asset class have gone through some pretty volatile cycles, and they usually move in tandem with one another. One cryptocurrency could be down for the day, one could be up, but broadly speaking, cryptocurrencies move up in valuation together and they move down in valuation together, much like how stocks broadly move up together and move down together, or how gold and silver move up and down together. The last point here I want to bring up here is some expectations for where we could see cryptocurrencies as an overall market go. Right now, the total valuation of cryptocurrency markets are a little bit under $400 billion, around $390 billion. And it looks like we're very much in pace not only to go to $400 billion, but eventually retest back up to the all-time highs here that we set here for market capitalization, which was $761 billion. Now, if we take, roughly speaking, that performance here, right, that we see here, that the overall peak here for price, we not only believe that we'll probably revisit back up to those highs, get some kind of rejection or correction or resistance here, eventually retest back up and continue climbing higher. We want to believe here that sometime towards our market peak or after our peak in Bitcoin, probably around January and February of 2023, as altcoins tend to rally further after Bitcoin sets in its final peak. We saw that in the last cycle. Sometime in early 2023, that we could do a 10x in this case on the valuation of cryptocurrencies as a total in this case. So going from around $800 billion, roughly speaking, or a little bit below $800 billion to slightly below $800 billion here as well, towards around $7 trillion for overall cryptocurrency valuations. Now, again, let's go ahead and just take a question here into account. Is it reasonable to have a $7 trillion valuation or slightly above $7 trillion valuation for cryptocurrencies? Well, again, that's subjective. It's up to you as an individual. I'm not saying that it's guaranteed to go here at all, guys. No one knows what's going to happen exactly. But the reason I think that this is quite logical and again, quite conservative comparative to some of the $100 trillion estimates that some people put out there for cryptocurrencies that believe they're going to just swallow up the overall economy in the next cycle. I digress on that. I really personally believe that in this case, a 10x is very reasonable because not only have we seen higher returns from previous highs, again, in the previous cycle going towards the new highs we set for total crypto market cap, but also Bitcoin is going to probably be making up about 50% of this, if not, somewhere around 30 to 40% in the sense of market dominance. And our goal for Bitcoin is to go towards around a $2 to $3 trillion market cap here, possibly up to $4 trillion if it goes to 200K in price. So if Bitcoin were to have 50% market dominance, go towards around a $4 trillion market cap, not even reaching to the full value of gold, in fact, not even half of gold's market cap, practically more about, at that time, probably gold would be around 16 trillion, so about a quarter of gold's market cap. In this case, we've got a lot of room for altcoins to make up some of that market capitalization, from Ethereum to Litecoin and other assets. We could very realistically see altcoins in this case do a total, basically play a portion in the role in the market here to grow valuations to this degree. Again, a more conservative estimate would be something in line with what Bitcoin's doing. Bitcoin is going to be going up around 500% in this case, or basically coming towards a 5x in the sense price, or excuse me, in this case, it would be a 400% return. But overall, again, the major thing that I want to emphasize here is that, again, we're having longer term cycles, right? So keeping in line with Bitcoin here, and outside of that as well, we're going to probably have a longer drawn out bear market. And we're taking a look here at total market capitalizations of the overall valuation. We can see here, historically speaking, from this point here back in May of 2014, this is played as a significant line of support, both here, here, and here. So we're not only looking to break away from that line of support to the upside as we get more and more optimistic in the sense of price, but eventually come back down sometime in 2024 to hopefully find support here for the asset class and to eventually start tailoring back up in price for the next cycle. Again, we have dramatic rallies and dramatic corrections. This is common in cryptocurrencies as an asset class. So overall, everyone, I know I've rambled on a lot today. I tend to do that if you're new to the channel. But above all, I hope you enjoyed the video. And one thing I want to emphasize is that if you're just getting started in cryptocurrencies, if you're looking to buy your first digital assets, or maybe tackle into DeFi, as we talked about, this new phenomenon in crypto where there's a lot more utility in the space, feel free to check out my crypto startup that I created called Digifox. I not only self-funded this startup, and we recently raised from the community to expand it, but long story short, it allows you to manage all of your financial activities in one app. It allows you to buy cryptocurrencies, earn interest, send and receive payments, and we're adding a bunch of new features to the app over time. So if you're interested just to get started, or maybe take kind of control of your cryptocurrency assets, you can do that through Digifox. And we're really excited to have you there. And along with that, if you're looking to kind of get started or maybe ask some people about getting started in crypto, you can always join our Digifox Discord, which you can join live from the application itself, or you can go at the link down below in the description to get started. But all in all, guys, I hope you enjoyed this video. As Bitcoin tailors back up to 13K, Ethereum getting back up above $400, and Litecoin as well, tailoring into that wedge at around the upper $50 range. I think we've got a really exciting time here to be focusing on digital assets like Bitcoin, Litecoin, and Ethereum. And I hope that more than anything, this video has been helpful for you in determining whether or not you want to invest in it. But bear in mind, there's all types of content you can watch here on this channel for free that I've put out that'll help you get started in the whole process of learning about how to do technical analysis, investing in crypto, etc. But the overall thesis, I would say, is that focusing on the longer term cycles, not trading day in and day out, is probably the best method to go about approaching cryptocurrency markets. Anyways, I digress, everyone. I hope you're all having a fantastic day wherever you are. And until the next video, I'll see you all in the next one. Take care, everyone.